All right, good morning, good morning. Welcome to Market Pulse this morning. And we'll be engaging with the Kenya Airways Chief Executive Officer, that is Allan Kilavuka, just looking at last year's performance and how the airline performed. And of course, you will remember that last year the airline made a 10.5 billion operating profit. At the same time, there was a 22 billion loss on the bottom line. So we just want to have a look at how the airline performed. And one of the things that we want you to help us with is just looking at this performance. Can you tell us how we got here?
So thank you very much, Jimmy, and welcome to Kenya Airways. We call this base, where everything happens. This is the performance of last year was indeed impressive, and it did not happen by chance. It's not just a hit and miss, It is a culmination of specific actions that we were been taking since 2020. You remember in 2020 we had the corona, where the airline, like many others, dipped completely. So we have had what we call Project Kifaru. In fact, now we have classified it into Project 1, Project 2. Project 1 being leaning the airline, making it more efficient, focusing on cultural transformation, so to focus on people and also to focus on the customer, making the airline more efficient, making it more cost-effective. All those actions that we've taken, including negotiating with our lenders, negotiating with government, negotiating with suppliers, and so on, to help streamline the airline's operations. It is as a result of that we've come to a point now that we are operationally viable. And maybe just to contextualize, the airline made a turnover of 178 billion Kenya shillings. This is the highest in the company's history, and it is one of the highest in Kenya for sure. That's one of the largest companies in Kenya. The operating profit, like you rightly pointed out, was 10.5 billion. Now, if you compare to last year we made a loss of 5.6 billion, so that is a 287% improvement from last year. The turnover itself is an 53% improvement compared to last year. So all those things are an outcome of activities and actions that we've taken to improve the stability, the strength of this airline to make it what it is today. So like I said, it's not a hit and miss, it's not guesswork, it's the hard work that the Kenya Airways team has put to get us to where we are today. Indeed, it is true, we still made bottom line loss. That is as a result of the financing costs, which are quite heavy, and also as a result of forex losses.
And of course, I know just for you to be able to achieve some of these results, there was a lot of operational streamlining. Can you just take us through what are the specific areas that you found an opportunity to streamline your operations?
A lot of it was to do with optimization. Okay, so if I want to start with revenue and cost optimization. So revenue optimization is to look at our network, see which networks are bleeding the airline, then optimize, either in terms of frequency or actual removal of some of the destinations that we were going to. So that happened between 2020. Even today, it's because it's an ongoing process of really looking at, is the network properly optimized? The next one is cost optimization. So you look at where can you get cost out. There are big ones, like for example the rentals. By rentals we mean the lease costs that we have of our airlines, of our aircraft. So negotiating with lessors to get better deals, or to elongate or to restructure the particular agreement, because they're long-term agreements, 12 to 18 years agreements. So we restructure that, and then look at specific big ticket items on our cost line and see how we can either cost out or optimize or contain. And then also just cash, right? So what can we postpone, reduce, defer, so that we have enough cash to continue operating. So that in terms of just looking at cost and revenue optimization, and then the efficiency of the airline itself. How can we improve on our on-time performance? Okay, by availing more spare parts on time, all the time, by looking at our operating process, streamlining that, making it better, more efficient, responsive. And by that, you will see that we started with about 58% efficiency at the beginning of 2023. By the end of 2023, we were at 80+% of efficiency. And that's not us saying. That is an independent analysis that was done by Citrium Analytics, which looked at all the airlines in Africa, and we were rated second best after Safia. And if you look at Middle East and Africa, we were rated 10th. And of course, like I said, in Africa, we were second best. Globally, we were rated 38th most efficient airline in the world. So that is a big improvement. Again, that's the first.
One of the things that you have been very vocal about is the fact that Kenya Airways is looking for an equity investor. And I just want to get it from you in terms of what would that arrangement look like? How much stake is KQ willing to put up?
Yeah. So we are looking for an equity investor that can invest up to a maximum of 49%. That's maximum. The reason that's maximum is because the rules in Kenya, the regulations in Kenya don't allow you to have an AOC or an airline operating certificate if you have more than 50% foreign ownership. So we anticipate that this investor will be most probably going to be foreign. So we don't want them to cross a threshold that will make it difficult for us to operate. So it's 49%, and in any case, if you look at the rudimentary or the back of the envelope valuation of the company, what you're looking for would be approximately less than 50% for sure of how we're valuing the company. The purpose of this recapitalization is extremely important. There are three main issues here. One is to help strengthen the balance sheet and also do some capital restructuring, okay? And government is also helping in that regard. Second is to make sure that we have adequate working capital to do quick investments. Third is for expansion, because an airline that does not grow will die. So for us, we see a lot of opportunity within our space here. So we need more aircraft. We need more to modernize our fleet as well. We need to grow. We need to go to more destinations. So that's why we need to expand.
Can you tell us in terms of absolute figures, what would that look like?
Yeah, so we, at this stage, we're doing an evaluation. We have what we, so it's a sensitive question to answer, and I'll tell you why. Because first of all, we're going through an evaluation at the moment, as I speak to you, by an independent evaluator who will value the company and confirm how much would be adequate in terms of minimum adequacy and, let's say, the sweet spot. So at this stage, if you ask me this question in 3 months, I will tell you.
What are some of the priority areas that you will be looking to invest this capital in?
So first of all is strengthening the balance sheet or capital restructuring, okay? So reducing debt and increasing equity. That's number one. Secondly is working capital. That is day-to-day expenditure. Again, strengthening that so that we can be able to respond quickly to some of the things that we want to modernize. And some of them look mundane. I'll give you some examples. So we need to refresh our cabin, for instance. Okay. We need to upgrade some of the software, so it's cutting-edge technology that we're using, and so on. The third one is expansion, and that's very critical. So we need more fleet, we need more aircraft. Of course, with more aircraft, you need more employees. We need to go to more and new destinations. So we need to increase frequencies in our current destinations, and then we need to explore new destinations.
You've talked about 49% in equity investment. So then the question that, of course, any shareholder would want to know is, what does this then portend for KQ's shareholding?
Investors have different reasons why they come to a company, and they have different governance rules. Some who put in their money into an investment would require that they have a huge say in decision making. You know, so it depends. Some want to see proper governance structures, not necessarily directly involved in decision making, but they want to see the structures that will help them to have confidence that the governance issue has been taken care of. And most of them probably all of them would want representation on the board. So it depends on the type of investor. Some would be investors who are experts in this field, which is very appropriate. For example, airlines. In those cases, they want to have some say, particularly how it will complement their own airline, or airlines, if it's more than one airline. Some are simply investors who can see a lot of potential in this fantastic company, so they want to put in money to see whether they can increase value of the company and how they can grow value, and also help to develop, because you see, Kenya Airways is not just about profit making. I know sometimes this clouds a lot of judgment. It's really about the contribution that it makes to the economy, not just in Kenya, but in Africa. So some investors see that as very attractive. How do we support this airline that in turn will make its contribution, not just in Kenya, but in Africa? So in those cases, they just want to make sure that they're comfortable with the governance in the airline, and if they are, if you get proper reporting and monitoring, they will be happy. So it's not one size fits all. Some would want more involvement, some would want less involvement.
All right, so Alan, for you, from where you sit as the CEO or as the airline CEO, of course, you have an idea of the ideal shareholder. So what would they look like for you?
Yeah, so the ideal investor would be one who, first of all, obviously, would give us the financial support that we're looking for, or capitalization we're looking for. Secondly, one that would add value, particularly technically value, and complement our core business, which is moving passenger and cargo. So a good airline would be fantastic, or one that has expertise in that area, or one that has influence on other airlines would be probably appropriate. But sometimes you find some investor who may not have the technical knowledge or know-how, and maybe may not necessarily be able to complement, but they have such deep pockets that they can influence others to do that. So that would be our ideal partner.
All right, so two final questions from me. One of them is, how soon can we expect this deal to be sealed?
Yeah, so the truth of the matter is that it's very, very complex. We would wish that it completes, or at least we have a clear indication by September of this year, which way we are going, and that we will be able to sign off by December this year, so that next year we are clear. This is the customer, this is the strategic partner that we're looking for, this is who we're going to work with, this is how we're going to work together.
In Project Kifaru, one of the proposal is monofleeting the airline. So what would that look like? And also, again, we saw the challenges that came with the 737 MAX, and so we just want to understand, what is the company doing to de-risk itself from even as you undertake this monofleeting, just making sure that you have de-risked your operations?
This is a good question, but to answer that question, you have to ask why. Because in every decision, there is risk and opportunity, and you make the decision for that particular decision if the opportunity outweighs the risk. That is how you make decisions. So now, you have pointed out a risk for one particular type of aircraft, which is the MAX. But remember that when we spoke about monofleeting, first of all, we didn't say it was going to be Boeing. Boeing is probably the natural choice because we fly Boeing at the moment. So it's easier for us to transition to an all Boeing fleet. What we said is that we are going to remove from our fleet the Embraer, not because it's a bad aircraft, it's a fantastic aircraft, but because it's too small for our network. Because we keep leaving bags behind and it's not good for our customers. So we need a bigger range aircraft, a bigger sized aircraft that will be able to carry all the luggage that we carry. So that therefore leaves us with two types, which is Airbus and Boeing. So we are evaluating those two. Now, Boeing, like I said, is a natural fit, mainly because we're already operating Boeing. They have a lot of mature aircraft. The aircraft that you pointed out is not yet mature. And if you go on the other side, you'll find that Airbus also have a lot of mature aircraft. They also have aircraft that is not mature. One of them is called an A220, which is very, very problematic, right? And I'm not saying this to dish them, but I'm saying this because it's obvious. It's there in the market. If you read anywhere, go and Google, you'll see that A220 has had problems galore. They also have a problem with, I think, 320, the Neo, because of the engine. And yes, Boeing have a problem with the MAX. So what we do is we evaluate those two and see, do we go Airbus full, and it has its advantages, to be quite honest, or do we go Boeing full, which has its advantages, one of them being that we're already flying the Boeing. The way we mitigate against the one you specifically mentioned, the MAX, is that we're not going to get a MAX straight away. We want it to mature a little bit more. So at the moment, we are, in fact, like this year, we were bringing in four aircraft, and all of them are not MAXes. We have what we call new generation, that is a 737-800. Two of them are freighters, and two of them are going to be passengers. Those are the ones that we currently fly. We are comfortable, we know them, they're mature, and they would have less risk.
All right, thanks so much, Allan, for making time to speak to us. And of course, let's do this again, same time, same place, right here on Hot 96.